Hello everyone, as you can hear, I am a bit vocally challenged, so this will be a short one. Let's do this. Last week opened with panic as the threat of Iran closing the Strait of Hormuz shot to 60%, causing the PSE to plunge below the 6,300 support level, closing the day at 6,218, much in the red. Iran's crude exports have steadily been increasing since 2020, and a disruption of this oil supply could push oil prices to $100 a barrel. While wars like this have managed to disrupt the markets, what we can learn from this is that the markets always bounce back. And once we understand this, once we embrace this, we should recognize that this was a buying opportunity. And while people flock to the grocery in panic, like I said, I bought pure gold, right? Among others, right? Call it whiplash or call it whipsaw. The very next day, there was a truce which presented more buying opportunities, and this pushed the PSEI back to 6,400 in an exciting comeback from just a day of worry. So right now, the chances of Iran closing the strait has dropped to 17%. And I was so busy those early days of the week picking up tons of bargains. And hopefully, you didn't also panic now. And we can all rest this weekend in silence and celebrate some wins, right? So let's look at the charts. Now, the PSEI nearing resistance at the 200-day EMA around the 6,450 area. Now, this could also be a resistance point actually if we draw a trend line here. Remember, 2 points make a trend line, right? So this could also be a resistance point. We can also draw a trend line here, which could be another triangle formation with an uptrend line here. Now, with momentum improving here at the MACD, we could break out, or best case scenario, we could break out of this triangle formation onto the next resistance here at 6,595 and retest support to confirm the breakout, right? So as the market panicked last week, this was a great buy the dip opportunity. But there are risks, right? So because of the support break here, it could have meant the PSEI to go down further to 6,120 or 6,100. And things could have gotten worse. But at this level, right, stocks were still at a good level, right? And the Mideast war is still a good opportunity to buy stocks that will not be too affected by oil prices, right? So I took a chance and did a lot of shopping here now. And again, while things could have gotten worse, you want to make sure that you still have enough cash to buy the further dip if that happened, no? But with the quick resolution of the conflict, no, I was lucky, right? So let's look at some of the stocks that I was looking at last week. We have Ayala Corp. Now, we mentioned that it was trading in a range. This is a very strong support level, so the expectation was that it will manage to bounce off of that level. It did so. So this was a good buy zone for Ayala Corp. So congratulations if you're able to enter Ayala Corp. GT Cap also, we mentioned last week. It dipped last week here. It ended last Friday here. We mentioned that if it was able to hold support here and bounce off of that, this was a good buying opportunity. So congratulations if you're able to get GT Cap. Despite the panic on Monday, it still managed to close within that area. So this was bullish for GT Cap. So congratulations if you were able to buy the dip. Also, we mentioned a swing trade with Wilcon. We showed the risk-reward ratio trade here again. A breakout of this double bottom means a measured target price of 830. Stop loss here. Wilcon moved past the target price. Usually when you do swing trades, you can take profit when it reaches the target price, or if the move is particularly strong, you can let go and just ride the momentum, or put a trailing stop loss. So the first signs of weakness or a retracement would be a signal to sell already, right? So congratulations if you were able to enter Wilcon on the dip here. Pure Gold, as mentioned, classic breakout, retest of support. This happened last Monday. Investors were panicking, but this was a good buying opportunity. Buy at the dip to the 20 EMA. Congratulations if you were able to do so. Of course, also Converge, not really affected by the Mid-East conflict. We mentioned that Converge is usually able to bounce back from the 100-day EMA. Despite the Monday panic, it was able to close above the buy the dip zone. This was a good buying opportunity also for Converge. And of course, as mentioned, STI, a good buy the dip opportunity also for STI. Now let's look at the year-to-date sectoral performance of the PSEI. The top performing sector, of course, mining, financials, and services. A late surge for services, but if you look at financial here, we're seeing some deterioration in that sector. Let's zoom into the 3-month charts, right? So we're seeing the services sector improving. Again, financial sector going down. It was the worst performing sector in the past 3 months. Zooming into the 1 month, the top performing sector, properties, right? Overtaking services. So what I am seeing here is there is a slow shift, no, of funds from financials, possibly because of the expectations of rate cuts. Funds seem to be rotating back into the property sector. So if you look at the property stocks, we start with ADI. I was also heavily buying into the property sector here. ADI showed a buy signal here when it broke out of the 100 EMA. This was a good opportunity to buy. Here, wait for consolidation. It's at resistance, but it did break out of this resistance here. It might consolidate along this area. If it forms a flag formation, this would be a good chance to enter ADI. SMPH also, we mentioned that it was trading in a range. It hit, again, it hit 2180 as expected. We were expecting it to hit 2180 when it was still here. Hopefully you set an alert. This was a good buy zone for SMPH. Our expectation now is for SMPH to hit resistance here at the 200-day EMA as well as this price range here. So a good chance to enter SMPH for a rotation into properties. Also, look at RLC, right? Buy signal here, a breakout of the 200-day EMA is a good buy signal. Wait for consolidation or a pullback for RLC. Even MEG broke out of the resistance. Here we have the price range here and the resistance of the 200-day EMA. A great breakout, but it was too late for me to chase MEG, and not really also one of my favorite stocks. So RCR also the talk of the town last week. Again, we mentioned this was a breakout retest of support, a good buying opportunity. I urged everyone to buy RCR. Congratulations if you were able to buy the dip on RCR, right? But again, it's about the yield. As at this level, RCR is giving 5.54% yield. It's of course lower than what it was before. It was giving 5.8, 6% yield. But if 5.5 is acceptable to you, then this is a good chance to enter. Remember, the mall infusion is dividend accretive. So the dividend rate of 10 cents, this will increase once the mall revenues. So when we bet on a sector, right, we don't just look at the technicals, we also look at where the fund flows are happening, and also we have to look at the macroeconomic backdrop here. Now, the property sector has been going through a rough patch over the past couple of years, but look at office vacancies, right? They have been slowly improving. Vacancies were at 22% and they have been improving now down to around 19%. Now, this is still a bit high because the normal pre-pandemic office vacancy rate is just at 8%. The exit of POGOs, of course, and the mid-range condo inventories are added to the mix, no? Continues to be a drag. No? So a full recovery may not happen until 2026 or 2027. But office space take-up, especially look here at the last 6 months, shows why interest in the property sector may be picking up. And we could be seeing, again, the first signs of a rotation into that sector. We'll see, right? Now, on to the global markets. The S&P 500 notched another all-time high, buoyed by the possibility of a dovish Fed, as Trump is heavily pushing for a replacement for Fed Chair Jerome Powell before his term ends in May of 2026. Now, while the markets rallied with the expectation of 6 to 8 cuts after Trump's pronouncements, the dollar reacted to the news, dipping past the support level here at 97.57. So it might be headed towards the next support levels here at 96.50 and 95.69. And of course, the peso finally taking a breather, appreciating back to 56.55, which should be good for the likes of Keeper, GT Cap, SSI, even Pure Gold, right? So the NASDAQ has also reached all-time highs. And what's also interesting is that every time the NASDAQ dips 20% and reaches an all-time high, especially within 3 months, right? This tends to be very bullish. This has happened 7 times. And look at the performance, right? 1 month, 2 months, 3 months, 6 months, 9 months, and 1 year later, the markets have continued to rally 100% of the time. So interesting to see if this continues to happen. At this point, considering funds are actually underweight US equities, would they start rotating back for the mid-year rally in July? And from the trend line, it looks like there's still room to rally. Now, looking at the data from 1980, right, June has actually never been the peak of the markets, with most peaks happening at the end of the year, right? So for this week, continue looking for possible entries into property. I've also lightened on some of my banking positions. Also consider the services sector, which has shown a lot of improvement in recent weeks. These include SSI, STI, DigiPlus, Tel, Globe, ICT, Converge, Pure Gold, RRHI also, right? So our topic for this week was supposed to be quick ways to look at financial statements, but due to my condition, let's discuss that for next week. But in the meantime, that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.